Colleen, over to you to introduce the rest of the panel.
Thank you so much, Tatiana. I didn't realize I was going to get a full bio. I appreciate that. I am so excited to lead today's conversation and so grateful to these three amazing and very busy women for giving us their time and expertise for a topic that is near and dear to my heart. I want to welcome Shila Nieves Burney, who is the founder and managing partner of Zane Venture Fund. I also want to welcome Gayle Jennings-O'Byrne, who is the general partner and co-founder of WOCstar Fund. And the woman who brought this all together for us today, Dr. Alicia Robbis, who is the founder and CEO of Next Wave Impact. As Tatiana mentioned, I've known Alicia for many years, and she is the reason that I became an angel investor and have learned so much. So thank you all, ladies. I won't go into each bio because I want to make sure we have time for the conversation, but you can see their incredible bios on our website and on their pages. And I want to dive in first by asking each of you about your path to creating the fund, what the current state of the portfolio is, the number of companies, the dollars invested. And given that many of our members are pursuing their own careers in impact investing, tell us a little bit about your path to creating the fund that you did. And I'll start with Gayle. Perhaps you can tell us about the WOCstar Fund.
Yeah, happy to. Thanks for having me and hosting this kind of conversation. These are really important conversations to be had. So my background is in Silicon Valley, and then almost 2 decades on Wall Street as a M&A banker, and then also in JP Morgan's corporate philanthropy. So I got to see the allocation of capital from corporate finance side with big corporations, and then the allocation from a charitable lens. And in all of that, what was missing was one important population, which was what I would call the sisterhood, and in particular, my sisterhood of women of color. And so when I left there, it was really with 3 intentions: one, to storytell, to champion and invest in women of color. And we are focused on technology around the future of consumption. So sort of 3 key things that happen in the consumption area. One is the content that we consume, whether it be media, entertainment, data. It's the resources, whether it be the food, whether it be cars, whether it be any kind of content, energy that we consume. And then it's the financial tech tools to transact that consumption. And so WOCstar Fund is focused on the future of consumption and the technology that makes all of that possible. Now, women of color and diverse inclusive teams happen to be our competitive advantage that will allow us to get the returns, but we start with a lens of making sure that we're investing in high growth tech companies around consumption. I can stop there first, or we can and let Shila talk, and then I can come back and tell you a little bit about how it's going and how people should be thinking about building their own and getting in this space.
Shila?
Sure. So I have spent about 20 plus years investing in human capital, so people, and have always, I would consider it righting the wrongs of the past. And so Venture is exactly, it led me here because I was righting a wrong in the sense of ensuring that diverse entrepreneurs and teams have the same access to capital, access to network, and access to resources as they begin to scale their companies. So this work where I am now is just fitting for where I've been. I've always worked on behalf of marginalized communities in the sense of making those communities whole. And so right now we are targeting a $25 million venture fund to invest in diverse founders and teams, what we call the new face of technological change, who are building tech-enabled solutions primarily here in the Southeast, but opportunistically across the US. I think one of your questions was how many investments we've made to date and how when the fund started. So we started in 2019. We just had our first close in May 2021. And so it took about a year and a half just to really get people excited about coming into the fund. And then of course, the 2020 with the pandemic and George Floyd's death, people had way more interest in diversity. Because when I started, diversity was not a strategy, it was not a competitive advantage. And now all of a sudden it's at the front and foremost of all of our conversations. So really happy that the world is catching up for some of us who already knew this all along. And so we've made 5 investments so far. I'm really excited about those companies. 2 are led by women and the other 3 are led by a diverse team. 4 of the 5 are led by Black entrepreneurs. And so we're really focused and leaning heavily on Black, Latinx, and women founders. That's the majority of the portfolio. We've made our investment sizes. I think we've invested about 400K in capital so far. We're still fundraising. We've not hit our target yet, but we're doing rolling closes in essence. And so as we have closes, we're deploying capital. And so we hope to make some more investments at the beginning of next year.
Fantastic, thank you. And Gayla, just quickly back to you before we jump to Alicia. Do you want to tell folks quickly sort of the size of your fund and the number of investments and when you started?
Yeah, happy to. So we started investing beginning of last year. We've raised about 15 to 17 million. We will, our target is 25, but we can go as high as 50 mil for this first fund. The thing that is going to really set that close next year is that we've already made 9 investments and we've got 2 that are on pathways to exits. So one has filed, one has filed their S1 IPO filing. So they'll be going public fairly soon, probably first quarter next year. And then we have another one that's in conversation with a strategic acquirer. And then another one is talking to a publicly traded company about acquiring them. So we'll probably close first quarter of next year. But we write checks in the size of $250,000 to $500,000 right now, with $1 million in follow-on. And we've got 9 in our portfolio, and probably get maybe 2 more done before year end. Looking at term sheets right now. But we're up, we're rolling, we're deploying, and we're onboarding investors. We started with a lot of individuals and then family offices, and now we're moving into institutionals. So happy to share more about LPs and what that journey looks like later in the conversation.
Boy, a lot of exciting stuff. No rest for the weary this holiday season, huh?
That's right.
Alicia, tell us about your pathway to Next Wave Impact.
Yeah, so I call myself an accidental venture capitalist. That was not in the plans. I'm actually an economist by training, and I do research in entrepreneurial finance, and I was with the Kauffman Foundation for about 12 years and doing venture capital, and started from angel investing and crowdfunding as an individual investor, and my research looking at the racial and gender gaps in both the in high growth entrepreneurship, but also the gender and racial gaps on the investing side. And they're even larger on the investing side, and they're very much related. A lot of the reason why most of the venture capital goes to white men is because most of the investors writing those checks are white men. So I ended up doing a pilot fund when I was still at Kauffman, and realized I really wanted to do impact investing. And what came out of that was Next Wave Impact. And it's a fund of 99 women investors, 25 of them women of color. Everybody put in, most people put in between 30,000 and 300,000 with 3 capital calls, 1 a year. So $10,000 check or more each year for 3 years. Our portfolio, it was 15 companies. We've had 2 exits already, both of them founders of color. So it's exciting to write checks back to our LPs as we get these exits. But all of our portfolio was made up of women and founders of color. So super excited about that. But as a fully deployed fund, we're just, we're kind of in the waiting stage at this point and following and helping our portfolio companies. I did not want to do another fund. I'm not a venture capitalist. There's lots of people that want to be venture capitalists. And I joined the board and investment committee of the Kocho Impact Fund, which is an impact first fund that does both impact real estate and impact companies. And we also invest in funds. And we have committed capital to both WOCstars and Zane. And we're excited to support emerging fund managers, especially those that are investing in impact companies and investing in female and founders of color. So yeah, it's been pretty exciting, and it's great to be part of the ecosystem, and I'm very passionate about getting more women and people of color involved in the ecosystem so it's not so dominated by white males, because good and ideas come from everywhere, not just Silicon Valley and Boston, and they don't just always come from white men. And I want to see us level the playing field and get more capital to entrepreneurs that are not on the coasts and founders that are more diverse.
Yeah, Alicia's been such a real ally and champion of this sisterhood. I can't say enough good things about what she's been doing, but she's definitely one to model as we think about how we all support each other.
I would second that. That's fantastic, Gayla. And you each touched a little bit on the type of companies you're investing in. And Alicia, you just mentioned getting more capital, to the center of the country where you're from, which I can appreciate. I'd love to ask each of you about, what's your investment thesis around impact? Is it that the founders themselves who have traditionally been underfunded, is it creating their wealth and the jobs that their companies will create? Does your focus on impact go beyond that in terms of the social return that the companies are creating? And anything else you'd like to share about sort of your geographic or sector focus would be great. And I'll turn it to Shila first.
Sure. So we're investing in diverse founders and teams. And what that means is that the founder themselves have to be diverse. And so Black, Latinx, women, Asian, Indian, that sort of stuff. So we have specifics around the founder. And then the team itself, we're looking for them to make up the rest of the team with also diverse individuals. So we feel like we'll have impact just by investing in these diverse entrepreneurs who will go on to exit and invest in other diverse entrepreneurs. So we create a cyclical effect that way. We do invest here in the Southeast primarily. The Southeast is so underfunded and so undervalued. There's so much talent here. And so we really want to focus on this particular area, but we are saying opportunistic. If there's a great deal in the middle of the country, I want to be able to invest in that company. And so we say opportunistic across the US. We are tech enabled. And so we do have some sectors that play very well here in the Southeast. That is fintech, edtech, supply chain logistics, digital media. The creator economy is one that just popped up that we really want to focus on around these young folks. And then IoT, we made a couple of bets in IoT. I don't know if I said digital health is either, but a lot of these companies spin out of our universities here. And we want to be some of those first checks with some of those entrepreneurs. And so that's one of our sort of differentiators, is accessing the university pipeline of entrepreneurs. In terms of, we're looking for seed and early, I'm sorry, I'm going on to the next question. Well, we're also looking for, I'm sorry, you were going to say something, Colleen?
Okay, keep going. I'm just
and we're also looking for us impact, and we're having, so Zane has two things going on. We have the venture fund, and then we have a programming arm where we're seeing huge impact with these companies and their hires. And so impact for us also looks like the types of folks that they're bringing in, how many jobs are being created, where are those jobs being created at? And so that's kind of impact for us. And so that's a financial and a social impact that we're both looking for. Even though we're not an impact fund, we think we will see great impact by investing in the founders that we're seeking to invest in. And so for us, it's about a multi-faceted approach, right? Having all these different ways of looking at diversity. And diversity is the lens that we look at every investment first before we make any a decision on a particular deal. But it is diversity of the team.
Thank you. And I heard you say, be the first check in seed stage. So clearly you're focused on early stage companies that, were it not for your investment, might not be able to grow.
Absolutely, absolutely. And every one of those companies we've not led any deals yet. I'll be very honest and transparent about that. But the companies that we've met, and I'll give you an example. The very first investment I made, an IoT company out of the Research Triangle, woman who created a smart knob that could retrofit on any stove. She came to me a year before she was ready for venture capital. I just said, you're not ready. There are a lot of things you need to get in your company. I worked with her for an entire year. And then she pivoted to software during COVID. I wasn't ready to write a check to her. This girl was ready to be invested in. So what did I do? I went to a local fund here in Atlanta, made the intro. They immediately wrote her a check and then went out to help her get other folks to come into the route. I had some FOMO. I'm like, wait a minute, somebody's going to take the work that I've done and, you know, take all the credit. And then I came in later and I went out and helped her get more investments into that fund. And so it's that thing, it's working from with founders at any sort of stage, their early stage, but knowing even if they're not ready, you can still work with them to get ready. And so that's an example of being the first thing to kind of help support these companies along the way.
That's a fantastic example. And I know there are some female founders in our audience that are going to want to hear advice like that about where to go and when they know they're ready. Gayla, tell us how WOCstar Fund thinks about impact.
Sure. We actually, in some ways, don't.
Okay.
We are impactful by nature, but we don't have to think about being impactful. We just are impactful. And so that's probably a cheeky answer, but so let me unpack that a little bit. We are impactful by nature, but we invest for alpha. We truly believe that women are walking alpha. And that by investing in them, we are going to show the market the segment that they have overlooked and thereby the returns that they've overlooked. If we can, by our success as a fund and the success of the founders, be able to change the narrative in the marketplace and thereby change who invests and where capital flows, we will change the world. We right now as a country have lost the ability to add 507 billion to our GDP, US GDP, because we did not invest in women of color. So impact for us is in the DNA of what we do. You'll never see it on our website. You'll never see me talking about it, but I can't wake up each day without being impactful. I'm just impactful by nature. Here's the other side of what we're talking about though. And the things I do think about that have impact is that 507 billion that we didn't add to the US economy last year. If we are able to unlock, and there's a group of us that are working together, female fund managers, if we can unlock dollars for our funds, right? Funds like Shila's, funds like Tracy Gray at 22, the 22 Fund and Supply Chain Capital, all these great funds. And if people want to know about other funds, happy to share some other great ones out there, right? This is about all boats rising. If we can unlock dollars for us female fund managers, we together can add about $1 trillion in enterprise value to our economy. The beautiful thing that I love about our LPs is many of them have never invested in this way. And as much wealth as they have, and as smart as their financial advisors and their wealth asset managers, right, and the Goldman private banker and the JP Morgan private banker, those platforms don't allow them to have access to fund managers like us, and definitely don't get them access to founders like us. So this is more about not just being impactful for sake of being impactful. What we're really now talking about is the competitive nature of the US economy. We went down to 9th place in our competitive ranking globally. Think about this. The fiber optic cables that's allowing this conversation and this video and audio and recording to happen, the call waiting on your phone, the caller ID on your phone, the CCTV, the nanny cam, right? The speed camera, the button I had to press to get the flight attendant's attention when I flew to a conference last week. Those were all inventions by a Black woman. Now, let me be very clear. It wasn't a woman of color. Just those 5 inventions, innovations, were a Black woman. So now if we take Black women, brown women, if we take BIPOC women, think of the innovation we could be adding to society. We're not talking about Black girl hair products and soul food. Don't get me wrong, I love all that, right? But we're talking about real tech that we all benefit from. That's impact, in my opinion. That's what I get excited about.
That's huge. That's huge. And thank you for sharing that story. I certainly didn't know that. Would love to learn more about that amazing woman. One thing that I heard.
Women, those are different women. Those are different women.
Of course, I thought like one woman invented all that. That would be amazing.
Right.
But women are problem solvers, right? Like women are problem
Yeah.
solvers. That's
Yeah.
what we're talking about.
And
Well,
I
I wanted
also
to
heard,
interject real quick, Colleen,
yeah,
if you
go ahead,
if you
Sheila.
don't mind. That number, so I think it was either McKinsey put that number at like $5 trillion. The number, when I first started, it was 4 trillion. And now they're predicting that we have basically left $5 trillion on the table, which could have been part of our GDP, because we didn't invest in diverse entrepreneurs and teams. And so we're actually missing out on wealth building opportunities by just making an entire group of folks invisible and not investing in those folks. So I just wanted to add that little bit to that number. You're focused on women of color. Mine is a bit broader than that, and that number is at $5 trillion. So there's a missed opportunity out there.
It's really astounding. And I love the point that you each made about making the world, making our country more competitive. One thing that I heard from both of you that I think aligns with some of the work Alicia's done is, if we're going to support more diverse founders, we really have to diversify who's investing in them. So with that, maybe Alicia, you can tell us a little bit about how you look at impact, the types of companies that you're investing in, and is it a double bottom line impact beyond who the founders are?
Sure. Yeah, for us, it's not just about investing in women and BIPOC founders. We want to actually be investing in companies that are solving really societal and environmental challenges of our time. So we want to look at a double or triple kind of impact thesis. I like to use the word impact because everything we do has an impact, positive or negative, and we want to have a positive impact. And so many people look at investment like, this is what I do. I invest in the stock market. I don't care where my money is in the stock market. I'm going to then donate or do good with the money that I make. But what if what you're doing with the money that you make is made from things that are causing environmental degradation or inequality or private prisons or oil and gas? And so I think it's good to look at it more holistically and say, okay, I can actually make money by investing in companies doing good things, and it doesn't have to be one pocket and another. So for us, impact is front and center. We want to invest in underrepresented founders, which is one impact, underrepresented areas, which is another impact, but then impactful in, solving, environmental or social challenges that that we face right now, because we all know that we're at a critical point in our trajectory as a planet, and we need to have real changes, and we need to put significant amounts of funding behind these changes if we're going to survive as a species and as a planet. So
thank you. I think we've covered a few of our additional questions. In the interest of time, I want to skip down and ask each of you about, what should a woman-owned company, a woman that thinks she's ready for equity, where should she go? Where should she start looking? Shila, you mentioned a program that you're running alongside the fund, I think, to help folks figure this out. Sure. And then for those of you that are still raising capital, there may be some interested investors on the phone. How do they get in touch with you to explore opportunities? So Shila, we'll start with you.
Sure. So for the women, research. Looking for capital is hard already, but knocking on doors that you're not going to get an answer to, it just doesn't make any sense anymore, right? So if you're looking at funds that only invest in space tech or some other sector, like look for funds that have sort of a diversity mandate. They've decided that they're going to invest in women, and make that sort of list first, I would say. And then I would also say, if it's a male dominated, if it's a male fund, make sure that they have, because every fund is different. Even though there may be women-led funds, that don't mean that they're investing in women or women specifically. They're open to everyone. So make sure you're looking for the right type of investor for your particular company. But then look a little bit deeper than that, of course, and then see if there's a diversity mandate, they invest in your particular region, like if they may be in the Southeast. There are so many different factors that you need to be looking into when looking for a potential investor. And so for us, what we do, Zane Access, I'm not trying to plug the program, but at the same time plugging the program.
It's a great program, plug away.
Go ahead, do a shameless plug.
What we do is educate folks on getting capital ready, right? There is a process of getting before you start going out looking for capital to make sure you have certain things in order that folks like me are going to be looking for. And folks like Gayla, when you get to her, you can answer those questions because you've gotten capital ready. And what we do as part of that is we introduce them to a network of investors. It is on the founder, not the investor, to remember where they met you. For you to, if Gayla gave out her email address and said, get in contact with me, follow up with Gayla, keep Gayla in the loop. Don't expect like she's going to be like, we're busy. I'm just going to put that out there. She may not respond right away. But if you're hungry, you're going to keep beating the door until you get an answer from someone. So what we do is we create this network for folks to be able to have at least a network to start with. And then they can make intros to other folks during that fundraising process. Brad Feld is one of our allies, and Brad has participated in every program, and he tells these entrepreneurs to connect with him and put Zane so he'll know who you are. A very small amount have actually reached out to Brad. And I'm like, why? You don't have to tell me but once to follow up with you, and I'm on it. And so it's on the entrepreneur. But anyway, we provide a network for them of like-minded, aligned investors with Zane, people who think like we do, who are looking for, founders like we are, but also are expecting returns just like we are. And so that's one way to do it. Get with the group, an accelerator, whoever who's going to help you build that sort of network and that list of potential investors for you. How to get in contact with us. We are still taking LPs. We just closed a diverse investor initiative where we really were trying to get more women and people of color on our own cap table, if you will. And out of 25, 19 were women. And I am so excited about that because that lets me know that women have liquidity. Women they want to invest as well. They just need the opportunity. So reach out to me at zane.vc, Shila at zane.vc. I'm happy to talk to a founder or an investor, either one.
Fantastic. Thank you. And the program, again, you're running is called Zane Access, right? That's the 12-week.
The program, the programming arm is called Zane Access. The program itself is called the Capital Readiness Cohort. And it's about 10 weeks of programming. We teach the technical skills and the soft skills of fundraising. This is not a pitch competition to tell you how to get better with your pitching. We're talking about dealing with biases when you walk in a room with a potential investor and how to overcome those and stay on your target of what the conversation is about, right? We talk about a lot of the different things. And so we say it's like if Venture Deals was written by a Black woman, right? My experience of looking for capital, I'm trying to educate these same entrepreneurs about what it's like. It's hard as heck, but you have to keep after it. And so we do a lot of that. So it's the Zane Access Capital Readiness Cohort Program.
Fantastic, thank you. And Gayla, what advice would you have for female founders looking for capital? And where does WOCstar Fund find most of its pipeline of investments?
Yeah, I'll start with the latter. So we actually have been in the market for about 5 years now, and so have a great entrepreneurial founder ecosystem. And we track companies for a couple of years sometimes before we even make that first investment. I love the story that Shila told about, and I've met her. I'm blanking on her name, but the woman with the oven.
Akshita.
Yeah, thank you. So like that, we've been tracking many entrepreneurs before we ever make our first investment in them. But people can find us on our website, wocstar.com. If they have a company, we've got an online intake form. And then in terms of the investing that we do, or how founders should think about the investment, what Shila talked about in terms of the homework that has to happen before I would say that's absolutely 100% right. And in that homework, there's also just, people need to understand, is venture the right form of capital for them? Now, I don't want to put myself out of business and have you guys all think, oh, venture, forget about it. Gayle said, don't worry about venture, venture's dead. No, Gayle didn't say venture's dead. Gayle just said venture may not be what you need at this stage of your company. The biggest thing, I was at a conference the other day, and a woman said, hey, I've got this idea, I want to come, I'm looking for capital. And I said, you know what, don't call me. And I was like, give me my card back. And I said, here's why. I said, go build your company, put a product in the market, let the market beat you up, tell you what it wants, what features it wants, and what it'll pay for it. Sell a few products. And then probably in a year or two, maybe venture might be right for you. But that's the work first, right? So I love that Shila talked about that. I don't know if that answered your question, but for founders, I would say we're all out here, but it's also about doing the homework first. So many conversations start with, so tell me about your fund. And I think that's not a really good use of anyone's time if we don't likewise do homework on each other, right? Like I'm out raising every day too. So I know in the same way, you know, founders raising 2.5 mil or 1.5 mil. I told the world I was going to raise 50 mil and get it into the hands of women. So I'm right there with you in the trenches.
Great advice about prototyping and getting something out there, so you really have a path and some learnings.
Yeah.
Alicia, what would you say to
Well,
women?
and just to add on to what Gayle just said, you know, venture capital and angel financing is for a very tiny fraction of all firms. And so as founders look to see what kind of capital is appropriate for them, you know, the first answer might not be angel financing or venture capital. It might be a debt financing. It might be revenue-based financing. So, you know, look at the whole range of capital options out there, because taking venture capital or angel investment, you know, comes with costs, you know, comes with investors. And sometimes they can be very valuable and add human capital with their financial capital, but it is a relationship and it's a long-term commitment. And so you want to be sure that that's actually right before you take that. And all investors are not equal. So make sure that you're aligned in the, you know, your values and do your homework. So
yeah, and the other thing I would add to what Alicia's saying is, I often ask the founders that I meet with, who have you invested in? Because once you start investing in another company, particularly like at the angel level, right? Like pick a number. Your number is $500. Divvy that by 5. That's $100. That's 5 companies you can invest in. Once you start investing, you also think differently. And the things that you're looking for and the questions you'll start to ask of those companies that you've invested in can help inform your own company. So I'm always also encouraging and asking, who have you invested in? I think entrepreneurs need to invest in entrepreneurs in the same way women should invest in women. So much we can learn from that.
yeah, especially now with crowdfunding, you know, you don't have to invest $100,000 or $1 million into a specific company. You can invest 100 or 1,000 into individual companies. So it does lower the barriers for entry into that.
Yeah, that's right.
You know,
And oh, go ahead.
Oh, I was just gonna say crowdfunding doesn't have to just be equity crowdfunding. I mean, more and more venture capitalists and angel investors are saying, go do a you know, a Kickstarter or Indiegogo, show that you have product market fit, show us that you're producing something that somebody wants that they're going to be willing to pay for. So crowdfunding is great, and the reward-based crowdfunding is great to show product market fit and to get non-dilutive funding. So it's definitely a resource that entrepreneurs should look at.
Yeah, I mean, we've even gotten creative ourselves, right? So we're a venture fund, so we're taking on direct investments from accredited investors. But we started looking at how else can we allow people to be a part of what we're doing. And so you'll see in the chat that I put in something called the allycapitalcollab.org website. It's a public charity by which people can donate into the Ally Capital Collab. And those donated dollars, those donations can then go to help us in our investment of BIPOC entrepreneurs. And so it's also been a great way because we know that, and often women have traditionally been philanthropic, and they're moving into angel, and they're moving into venture, and they're moving into other asset classes. And so this is a way for them to be allies to us, but they can do so from their donated charitable arm. And now between now and end of year, if you donate via our Ally Capital Collab, you can deduct up to 100% of your adjusted gross income. So DAFs and direct investments to the Red Cross or United Way, 60%, depending on, but the CARES Act, 100%. So if anyone's thinking or want to say, I'm an ally with $100 or $100,000, do so before year end via that link to join us on our WOCstar Ally Collab journey and get that write-off.
Yeah.
That's a great way to get started.
Yeah, we're going to be doing something similar. We just haven't gotten our 501c3 status yet. We're waiting on it.
That's okay. Well, call me. I'm happy to help and share any.
Well, it's up to the IRS right now. We're just waiting on them. But it's a good way. What we're trying to do is people want to be a part of the investment community. They may not have, the 100K or the 250K minimum to get into a fund, but they want to be helpful. And so that's why we're going to be setting up a Zane Allies and Angels network for that very reason. But what I wanted to go back to was something that Alicia said, which is spot on. Every venture isn't for everybody. And I don't know how and why venture got so sexy that every company that people think they can stand up has to be venture backable. It's not. And so for us, when we're doing the Zane Access programming, we bring in all types of capital so that you can decide which one is best for you. There's revenue financing, someone mentioned crowdfunding. There's so many ways to get to capital, and venture should be like your very last resort, because we first of all, you have to be venture backable, and then we want you to scale and scale quickly. And every company isn't ready or prepared to do that, or it won't be able to do that. So just keep those things in mind. And so what we want to do is we try to educate folks around every type of capital that's out there, including your own capital and bootstrapping as well, because sometimes you have to bootstrap to a certain point. What I want to do is also tout some of the successes. Once we found out, if you educate entrepreneurs about capital readiness and how to go out and fundraise we have had about $6 million raised in capital. We've only had 2 programs, $6 million raised in capital, 40 jobs created, over 3 million in revenue. And it's just the education. So I think in doing more education and informing really gets people at the heart of how they can actually build and scale a company. It's not always just give me the venture capital and let me go. Let's get some education in there too. And so we've just proven that out just with 2 cohorts. So just really wanted to plug that as well.
That's amazing. Congratulations. I love that. I love that. The flip side of this investing is for those that are wanting to get into it from a career or professional standpoint, or from their own portfolio, right? And the advice that we should be the things we should be talking about is the track record and building it now. And so investing, if you're thinking about this from a professional lens, I would also say, take that number, right? If your number is $500, if your number is $5,000 or $50,000, take that number, divide it by 5, do 2 investments in a place or an industry or sector that you know. Do 2 in maybe places that you're just really interested in and have a passion for. And then do the 5th one with people that you can learn from. And by that, I mean, do one with other people and listen to the questions they ask. Hear what they're concerned about. And those 5 investments, that will start not only will probably start a great portfolio for you, but will also start your track record. Because it's not enough to say, I'm really passionate about venture and I want to go join a fund. But people are going to start to ask how and what you bring to the table. And so the biggest thing that all of us could be doing, and I wish someone had told me this earlier, was to keep building my track record. And when I went back and I said, oh my God, I have been investing, let me add all these things in. And it was like, wait a minute, I've got like 10, 12, a dozen investments, and, I've got a 3X, my personal, but I didn't connect it, right? So I just share that with you now to think about.
That's fantastic advice. I'm getting just so inspired from everything you guys are sharing. I want to make sure we leave a few minutes for any questions from our audience. So for those of you in attendance, if you want to enter questions in the Q&A or the chat, Tatiana can help us to get some of those addressed. I do have to ask, you know, we have you three have like dedicated your life's work to this, and we have another 3 amazing women tomorrow. But we know in 2019, less than 2% of VC went to women. I think I read that 0.006% went to Black women. And I just heard Karen Kahn from iFund Women on LinkedIn last week, I think, talking about 2020, where we had 16% increase in VC, but the share going to women fell by 3%. So like, what's going on with all of this amazing brain trust and resources being driven the right way? Why are we still having this conversation? And what is it going to take to really move the needle? Oh, anyone who wants to start.
I'm happy to start, or Shila, would you like to?
Oh, go ahead.
Yeah, so I think what's going on is a couple of things. One is I think we're in a headline media society right now. So we have a lot of companies that are putting out headlines, and then they got to go back and like hire people and then go figure out their strategy around what they just told the world they were going to do around diversity and inclusion, right? So that's its own space. The other thing in that, a lot of those, if you peel them back, Washington Post did a great article, and about 60% or the 60 billion that was committed after George Floyd, the bulk of that was by financial institutions. In that bulk of that, the bulk of that were mortgages and loans. So basically products that they sell to the marketplace. So yay, they're going to sell to Black people mortgages. I thought you did that, but okay, 2022, you're going to do it. Great. About 5 million of that was for grants. Now we know as companies, you don't build a company on a grant, right? So now we just move out of the headline part of this, right? The headline media part of that, right? George Floyd headlines. The other side of the capital and where capital comes from is from individuals and high net worth individuals and family offices and trusts and foundations. And what we're finding there is that we're still in this space of maybe mission aligned, but not portfolio aligned. And so what we're having to now deal with is how do we break through that and some of the isms that exist. Now, there may not be the traditional isms. Now the isms are the track record isms, the fund one isms, right? New team isms, right? So those are some of the isms that we're trying to break through now. And so finding people that don't have those kind of biases is a lot of what the work is. Now, the ownership isn't just on those that have those isms, right? The ownership is also on us as fund managers to prove out the investment strategies that we have. And so that's why seeing Shila with those investments that she made and the success of them, and that's why you're seeing like us being able to talk about the 3 exits that we're working on and the, you know, north of 3x fund performance to date, right? In our fund, right? Higher than the 30% IRR. Like those are the things that we have to use to help people really see that this is a profitable place and space to be investing. But I think that's a lot of what's still keeping the numbers not where we want them. And the other side of this is we're talking about human beings, right? As much as data we can put out there, listen, I know what a cheeseburger does to my hips, right? It doesn't stop me from eating a cheeseburger. So the other side of this is we know that even though the data and longitudinal studies around this demographic being very highly profitable, we're still dealing with behavior.
Yeah.
And people.
Yeah, and I don't remember who did the survey, but in 2020, I think it was over 80% of VCs who were interviewed thought Black founders didn't exist. And about maybe 6% entrepreneurs existed. And so we're still, even though the numbers, you see that to Gayla's point, the headlines, but there is still a perception bias against us, and women in particular, that we can't start companies that we won't be successful. And so while the headlines look great for have gotten funded, there are a lot of women who are getting pushback from investors, and they're not getting funded. And so I'll give you an example. Now, I don't know what this means, but my last investment was a woman who came out of our Zane Access program. She closed at over $3.8 million. There were no women fund managers except myself. And I came in partly because she came out of our program. I knew she had a great product, but she was out of our, she's in Pennsylvania, we're in the Southeast. And I was like, I have to get on her cap table now. There's no woman on it, not one woman investor. And it's not because women don't want to invest in their company. We're very limited. Both Gayle and I are still raising. So while you see 25 million, I don't have 25 million yet. So I can't really fund every company that I really, really like. I have to be very strategic. And then the check size is not the check size I want to write. And so I think you see a lot of, we're still dealing with a lot of the biases around women founders and our ability to scale a company and be successful. And so that's why the headlines, the numbers look so bleak for women in a year that looks like it's been such gains. Women have actually gotten less funding this year. And that is shameful. Just so you have to talk about.
But listen, I don't let negative news pierce my heart, right? Like if I listen to all the research and data and the news that was out there, I'd be in a corner, I'd be in the fetal position in a corner in a dark room somewhere, right? No, when I hear those numbers, I think opportunity.
Yeah.
Shame on you. I'm going to go after that. So now my language is I am investing in a female arbitrage. Right? When there is a mismatch in market in terms of value in one marketplace versus another, right? What does that spell? Opportunity.
Mm-hmm.
Right? So if the numbers are 2% or if they go down to 1% next year, shame on them. I know, and I know my LPs that we're going to do really well.
Mm-hmm.
Right? Because we're going to invest early, we're going to invest low, but we're investing in markets that have high EBITDA multiples, lots of M&A activity, right? So us going in there, and I say to people, I said, listen, part of what's happening, calling back to your question, it's isms, but it's also in that behavior, what I didn't say and should have said, but is also that part of this is about trust and power sharing. And if we look at history, guys had to take power, right? No one just got up and said, I'm going to share Greece with you. You get part of England, right? Like you had to take, right? That in many ways, we're not, we had to learn it, right? Our parents would be like, share with your brother, right? We have to learn to share, right? Right? That's power. It's very hard to give power, share power. But when we see winners, we want to be around winners. So part of our role, everyone on this call, is to show how this population, this demographic, the work that Impact Forum is doing is impactful, but it's winners and that it's the place to be. And I say to people, I said, listen, I don't need you to be as woke as I am. And I don't even know that I'm that woke, right? I just need you to know that I know where the best investments are. You don't have to ever get to a point where you know where all the BIPOC founders are. That's my job. And guess what? Your best risk mitigation is just to give me the money and manage it and invest it on your behalf. Right? We don't all have to be Gandhi and Martin Luther King, right? Like we can let others
appreciate that you turn this around, Gayle, because I didn't want to end on a negative note, but I felt like I had to put the numbers out there.
Yeah.
I see we have a question from, is Robin? Do you have your hand raised?
Hi, Robin.
Yeah, we have a couple of questions.
ahead,
Robin had asked to ask her question live, and then I have a couple in the Q&A. So I'll let Robin go first.
Hi, ladies. Thank you so much. This is so fun. I love listening to it. So recently I came off of maternity leave and somehow I've become the de facto person that everybody talks to about leave and family planning. And when it comes to women entrepreneurs and women business folks and all that, I recently heard a situation where a lead investor pulled out because the founder did not tell them that she was pregnant. And they found out through other GP. And this is, I think, becoming more and more of a topic of conversation. So I'm just curious, because I have some thoughts on how to approach it, but I'm curious because you all have been in it longer than I have. Like, what do we do? How do we change the culture? How do we change the conversation? Because there is going to be a difference, right? A man's not going to be out of the workforce literally growing a tiny human unless they're adopting or whatever. And so they're still going to need maternity leave, but there are some physical limitations. So how do we approach that? And probably we need a whole hour for this conversation, but
Oh my God, Robin, do you have an hour and some white wine and some
I know, right? I know. This is a tough one, but I think we
listen,
need to talk about it.
Yeah, but it's tough, but it's also easy. Be you. Just be you. The person that, you know, that guy that pulled out, you should be like, thank you.
Yep.
Because I didn't see your asshole code, but now you showed it to me. Thank you.
Yep.
Right? Like, that's it. Like, you're like, listen, I can't stop being Black. You can't stop being a woman. You can't stop reproducing, right? So don't try to fit and make yourself smaller to fit in someone else's box.
I agree with that. The challenge,
That's the easiest answer. It's
the
not
challenge
full
in this
answer.
case, though, and this is why I'm asking, is the founder told some of their investors, but not their lead investor. So then it became an issue of a woman not bearing the truth, and that the lead investor was claiming that it wouldn't necessarily have been a bigger deal. They might have structured the deal differently. So I agree with you, but that was sort of like a very specific. So I'm just curious.
So the specifics is, and that's not a woman, that's not a gender, you know, that
Shouldn't
is
be an issue.
That no. The thing that you just point out is there was asymmetric information being
Right.
allocated. Right?
Yeah.
Give
Yeah.
all the information to everybody. When we talk transparency, they weren't
Exactly.
transparent. That's all.
Got it.
So that's
I
a totally
agree.
different one.
I agree. Okay.
I
I just
agree.
want to
100%.
know we're at time,
Oh.
but if everyone wants to stay on for a couple of extra minutes, if you're able to, we can try and entertain a couple more questions.
There's another question about guys, which I think Gayla volunteered to answer live.
Yeah, and I'm just going to answer for myself. I probably am the biggest violator of political correctness there is out there. And listen, being Black and a woman doesn't give you moral authority over political correctness and wokeness either, right? Like, I screw up all the time. I don't have a problem with guys or gals or changing lingo or any of that. But I'm human. I'm going to mess up, and you know, I'd rather work on doing the good than finding the words for the good. So I don't really have a dog in that fight of whether I say, hey guys, or, you know, listen, I'm a Cali girl too. So I'm like, hey, you know, whatever you get that day, that's what you're going to get out of me.
I think I'm guilty of using guys with you three wonderful ladies earlier.
Yeah, listen, I'm just happy I didn't curse. Yeah, like, I got a potty mouth. Like, don't worry about the guy and gal. Like, just try to keep me from sound like a, you know, a sailor.
Tatiana, anything else we can fit in?
That's all